What is up, everybody? So, this is going to be my 2023 year in review. I was going to do this in a few days' time, but I've got nothing to do this evening, so I thought I would just bring it forward now. Uh, this is going to be quite a long video, and I'm not expecting people to watch it all the way through. I would say the main bit is going to be this here in November, because this is where I think I made some massive changes which have proved to be, I think, a pretty incredible. So if you're not planning to watch the whole thing, I would skip forward to that. This is also a mini response video, I guess, to a comment I just received on one of my YouTube videos from a guy called Mike, who has emailed me multiple times trying to get me to watch someone else's channel. I had a look at the channel, and I think it is possibly one of the most blatant scam channels out there. And in his comment, Mike has essentially, I'll just bring it up right now, decided to resort to um, abuse, if anything, saying anyone who has traded for a while would laugh at the statement this is a massive edge. It's a one-trick pony at best, taking 12-point loss and 5-point profit and break even, spelt incorrectly, and I'm not even good at spelling. It's not trading, it's donating money. 5 stars for enthusiasm and trying. Any dumbass can play a genius after the fact and talk about how good he could be if. However, when looking at a hard right edge of the screen when decisions have to be made without filters and additional information, one trick pony is bound to fail. Good systems has to be that should be have, not has to be objective and help the trade to stay out when conditions are not favorable. I don't see any of this in this so-called massive edge. It is a joke. So the reason it's a bit of a response to that is I'm going to show you that this is a massive edge, but I'm going to do it and kind of explain how I got to it, and then I'm going to show you all of the results that I've been having with it, and why I'm going to be sticking with it, and why I actually think that it's a really solid strategy that new traders should be looking into as well. But anyway, for the whole year, so I've just put in a basic outline here. So from January to May, I was actually trading a semi-automated system. I was trading it through Bullnox, who were the first prop firm I got funded with. I got funded 3 times. The issue was with this strategy that I was trading is that it was a bit too robotic. And what I have learned in trading over the years is that the traders who are really successful, the proven successful traders, they have their set rules, but their their rules are simply for entry and exit, and they use their intuition to understand when they have an edge. And there's a certain fluidity to their trading. So, for example, they'll identify there's a really good opportunity here, so I'm going to increase my size if I get my setup. Or the market's not in a great position right now, so I'm going to size down and I'm going to be a bit more picky on the trades I take. And this is the difference between success and not success, in my opinion. Success and failure, maybe is a better way of putting that. The strategy that I was trading did not look at conditions at all. And the moment that my friends and we kind of came up with it together, began putting some conditions in to try to only trade during favorable conditions, it actually fell apart even more. And it was in the end, we realized that the strategy either had a much smaller edge than we thought, which would mean it had massive swings, and the size that we were taking on it would just mean that it was a very, very difficult strategy to actually implement without having, um, you know, insane drawdown periods, which isn't ideal when you're trading with prop firms and they have the we have a fairly tight drawdown. And that was best case scenario. Worst case scenario is it could just not be profitable, and it might not work out. And as market conditions changed, it proved to be the case. So towards the end of April, May, I decided to abandon that approach and just sort of like look around and see what else I could find. It was actually when I found the channel 1 Minute Futures Trader. I would highly encourage anybody um, to check him out. I'm just going to put it up here. Really, he explains his trades really well. He's got a video out here that I found, which was something like the best strategy for futures, something like that. He's got a ton of good videos. very small pretty small channel, but a lot of value here. And I found this guy, and I really loved the way he was looking at the market, the way he was identifying his trades, explaining it all. And I actually joined his free Discords to chat with other like-minded traders, and I'm really enjoying the experience I'm having in there because there's a lot of people who it's not ego-driven, it's not sharing how amazing people are doing, it's more just sharing different approaches to trading. Now, in June until August, I worked in the USA. I worked at a summer camp, which has been an amazing. I've done it for 4 summers now, 2018, 19, last year and this year. It's been an amazing experience. This year was my last year, so it was a bit sad to leave, but amazing, amazing time. And I came back, and from August to October, I began trading more of the approach that 1 Minute Futures Trader had. I particularly liked his analysis of W patterns, which essentially is a false breakout. So to give a little bit of context, I'll try and find an example really quickly. So a W pattern would be something like this, where you have a move down, and then on this higher low, and you can see it kind of creates a W. This is a inverse head and shoulders, but this is how he would describe a W pattern. Let me see if this is probably a better one as well. So we can see, it's double bottom, false breakout type plays. And what he would often be looking at was something along the lines of this. It's probably not exactly his approach, but it's whatever. So we've got a downtrend that was forming. We then had a W pattern at the lows, and when this W pattern held, there's an opportunity to take a long on the break of this channel, risking something like this, and probably taking half the position off and pushing to the 50 EMA, and then moving stop to break even, just as an example. And I really liked this approach. I thought it was something that I could get relatively good at. I liked the way it was explained, and I actually pushed that into more of a false breakout type of approach. And what I would look for is trends to break after a false breakout or a false breakdown, ideally in the same direction of the market. So if we had a push, we made a high of say 17,000, came back to 16,950, popped a little bit, and then came down, tried to take out that 16,950, failed. I would look for the downtrend to break for a move higher. This is really good in theory because it does take into account people who are trapped in positions. The problem I found was that I became a bit too robotic with it. I began essentially, I use the phrase devolving quite a lot, devolving the setup, and by that I mean I would class a false breakout and false breakdown as smaller and smaller. So I would get one candle that broke above or below, and I consider it a false breakout, and that just isn't a viable way of trading. So I became a bit too robotic with it. I also think that after trading for a while, the edge wasn't all that big. There were a lot of situations where I missed a trade that I could have got involved in, and by the time we had a false break, it just all the volume had gone out of the move anyway. So even if I was able to execute it really well, I didn't think that the win percentage and the risk rewards would line up. I ended up in a situation where I would never have a runner because it wasn't as profitable, and then the risk reward was like less than 1-to-1, and the win percentage was probably like 50%. So it wasn't a particularly large edge. I think I could have perfected it, but it wasn't particularly big. And one of the major things that I have learned is that you need a much larger edge than you think to be successful. If you have a small edge that returns on average, say 1 or 2 times your risk every 10 trades, you need to trade at a pretty much perfect accuracy rate to break even, and that is never going to happen. I then moved on to trade a trend following strategy, which was all about entering pullbacks to a moving average. So essentially, once we had a direction established, I identified the 25 EMA on the 800 tick chart on the Nasdaq, and on the, I think it was a 2000 tick chart on the ES. Once we had a clear direction, normally these pullbacks would reject this level, and I began trading it. I had some mixed results. I didn't spend a huge amount of time on this, and in the end I back tested it for a while, and I came to the conclusion that there was an edge, but it was tiny, and unfortunately, again, when you have a small edge, it just, there's such a small room for error that it's just not feasible to actually trade. I think a lot of the problems people run into with trading is they identify an edge, it's way too small, which means that they have to just trade at inhuman levels. They're trying to trade almost like a bot, which doesn't really work. And if I'm being brutally honest, at this point, I kind of felt that I was ready to move on from trading entirely. I wasn't enjoying trading that approach at all. I was struggling, and I was not gonna quit completely or anything like that, but I was like, maybe it's time to secure a more stable career and come back to trading in the future. And a friend of mine actually said that I should watch a video that S&P Capital put out, which is this video here. This video is, and this is the bit, like if you skip forward, this is the bit. This video by S&P Capital, if you're thinking of quitting trading, watch this, is probably the best video that I have found on YouTube to help traders. And the reason for that is it's kind of like a interview kind of thing with Lance Brystein, I think it's Brystein, who's one of the traders of S&P Capital, and he talks about the period where he was unsuccessful and what he did to become successful. The main takeaways I got was, number one, to stop worrying about P&L, because P&L, when you're when you're not profitable, it doesn't matter, because you only need to be worrying about performance. Your P&L at the start doesn't matter, and I think everybody's at the start until they're profitable. So he's like, don't worry about the P&L, trade paper, trade tiny size, forget about the P&L, it doesn't matter, because scaling later on is super easy. Once you're profitable, scaling's, and with prop firms today, it's even easier. You can scale in the space for a few months from trading on one funded account, maybe 1 or 2 minis, up to trading 20 funded accounts with 40 minis, and that's in the space for a couple of months. And if you're able to trade that size, it's huge. So the P&L does not matter. That's takeaway number one. Takeaway number two was to go all in, to essentially, I think it was in this bit here. It was essentially to if you're prepared to do this, give yourself a time limit. For me, it was about 2 months. It was right at the end of October. It was like 2 months, and go all in. Commit fully to becoming, really great. And that isn't about trading. It's the work outside of trading. Go all in gathering data. Go all in on developing a system. Burn the midnight oil. Do it for the next few months, and if at the end of that it doesn't work, then you gave it your all. And that was a really big thing for me. And then the final thing, which I think was probably the biggest takeaway, was he said, you should, as a beginner trader or as an unprofitable trader, you should be looking for the easy money trades. You should only be looking to trade the trades that have insanely large edge, where everything is in your favor. You get maybe good risk rewards. And he said that often these easy money trades are going to be scalps. So it's situations where there's an incredibly high probability that you're going to get a move in your favor that's on the Nasdaq 5 to 10 points, so you can lock in profits. And if you can identify those situations, then, and you get really good at trading just those, then scaling those up in the future is going to be really simple. So they were my main 3 takeaways. And honestly, that was an absolute game changer for me, because the way that I did this was at the end of every single day during November, and I've done this ever since as well, all the way through. And I can show, I'll show this in a little bit as well. But I took a screenshot of the day's action, and I would look at the day and I would go, where was the easiest place to make money today? Where was the easiest trade? And I'll just bring over real quickly what that looks like. So I use Evernote for this, and if I go back, you can see it started on November 7th. This is part of my journal where I went there, my biggest mistakes, etc. And I would identify where was the easiest money. And on this day, the example was here. This trades opportunity where we'd put in a double top, we'd sold down, pushed into the 50 EMA, rejected. And the next day, we had a similar thing. This time it was a breakdown. It's not something I'd use now. A few days later, easiest opportunity of the day. We pushed off the open, we came down, we held an area of support, we got back over 50 EMA, we flagged, and then we ripped. And all I was doing, and there is an element in this of, you know, well, yeah, it's easy to say in hindsight, and I get that. But the whole point of this was to go, if we look in hindsight, where was the easiest opportunity of the day, and is there some similarities? You can see here, we broke out, we then held an area of support, we got over the 50 EMA, we flagged, and then we ripped higher. You can see here, we sold off, we held an area of support, we got above the 50 EMA, we consolidated, and then we ripped higher. And all I was doing was trying to identify where the easy money is, where it's like it just went in your favor almost instantly. So here, we put in a double top at high of day, we got below the 50 EMA, we flagged, we rejected it. You could have got short here, but it almost barely went against you before going to target. So I did this, and I've done this every day since. You can see every single trading day I have taken a screenshot of the easiest opportunity of the day, and you can start to see there's a lot of similarities here in what I see. We've held this support area, we get above 50 MA, flag, and then we rip higher. Here we put in a triple top, we get below the 50 MA, we flag, and then we head lower. Here we come into the previous day, I think this is pre-market lows, above 50 MA, flag, and then we go higher. And this was how I developed my current strategy. One thing that Mike said in his comment, just as a reply to this, he said, I'll just bring it up here again. A good system has to be objective and help the trader stay out of conditions that are not favorable. So the conditions that my strategy provides to provide me to stay out of conditions when I'm not favorable is this. I wait until I have favorable conditions, which is an area of previous support or resistance being tested, held, and then a confirmation that that is continuing to be the case, essentially. So if we just pick a random day here, December 12th, on this day, put in a low, that support was tested, it was held, buyers came in, and then it put in a higher low flagged at the 50 EMA. So my condition was waiting for an area of support to hold. On this day here, it was the same, but in reverse, where I was waiting for an area of resistance. We had I think it was the yearly highs, or maybe not yearly highs, but some highs up here is this golden line. We came up, we came into that area of resistance, we put in some sideways price action, we sold off below the 50 EMA, we flagged, so we've got confirmation that the area of resistance is there, confirmation the sellers are here, a bit of buying that is then met by more selling where we get in. So in reply to this, a good system has to be objective. Yes, it is. My system is objective, and it helps me to identify when there are conditions. So yeah, and in regards to any dumbass can play Genius after the fact, it's all about how good it could be. That's how you identify stuff that works. That's how you identify where a potential edge is. So I used this approach to develop my edge. I then, once I had seen this similarity in many days, I backtested the edge. I looked at other markets. I looked at the Forex market. I looked at gold. I looked at oil. I looked at ES. I looked at NASDAQ. I would pick random stocks and I'd have a look at those as well. I went and watched film or like different trading films from, or documentaries from the 80s, the 90s, and every time there was a chart, I would pause and I would see if this edge was present. And guess what? It was in some format or another. It wasn't always perfect with the 50 EMA, but there has always been an element of once a level is tested a couple of times, it rejects that area. It then puts in, if it's a short, a lower high, and that's the opportunity to get in, or a higher low for a long. So after doing this, I was pretty certain that this was going to be the edge I wanted to trade, and I started trading just the edge I am now. That was in November. Originally, I had a slightly different variation of this, which is a video I put up on how to avoid conflict, stuff like that. This is the evolved version of that. In December, I got my third account funded with Apex. Honestly, I could have got quite a few more funded, but I kind of YOLO'd some accounts when they were getting close to the reset. So I could have done a little bit better with that, but I didn't, is what it is. I started trading my live account, and my live account actually started off with a loss, and the loss on the first day of trading the live account was over $1,000. I think it goes down 1,100 on day one, and it is currently sitting at 51,651. So I'm up $2,650 from about $2,700 from the lows of this account. And my average loss is around about $300. So I'm up around about 9R with quite a lot of mistakes, which I'm fairly happy with. I would like to be more profitable, but I am fairly happy with my performance, given it's the first time I've traded a live account with Apex, first time I've traded a live account in quite a while. And then the second half of December, bad trading habits, and I slipped into a fixed mindset looking for short-term profit, and that is going to be my main focus going forward. But I now want to share just really quickly how I evolved this strategy. So when I started trading, this was you can see here right at the end of October, 23rd of October. My trading strategy was slightly different, and I was looking more at flags once we had clear direction. So this was variation 1, and I actually made from the 23rd of October until the 30th of October around about 45 points of losses, which is $900. But with the average loss, I think here being around about 8-9 points, that was only around about 4 or 5R, I think 5 or 6R. So it wasn't horrible, considering this was all paper trading, just testing the strategy out. The second journal from the 30th of October, this was at the point where I began trading my current strategy. You can see here the trade on the right. It's held a support area, it's flagged back, and this one, it didn't actually hold the 50 EMA. This is quite an early adaptation of this, so this was potentially a mistake trade. We then had another confirmation trade here, that's what I would call them. And again, an early adaptation. I would actually take this a little bit later now, but we can see we're starting to trade this strategy. And from the 30th of October until the 9th of November, so less than 2 weeks of trading, if we ignore this, because this is a different strategy, just taking the strategy I'm trading right now, I made a total profit of 74.25 points, which is around about just under $1,500 of profit. And this really jumped out to me and said, this is the way forward, because this is the first time I'm trading this approach and I'm profitable with it. And that's pretty big. We can see that the win percentage was 58.6%, which is already really good. And this is including all the mistakes that I could have made. So pretty decent return. It's not massive. I think, we look at it, the average loss being around about, I think, 14-15 points. It wasn't huge, but it was up around about 5 or 6R. Now move on to my third journal, and this was again, I was still trading both the previous strategy and this strategy, but I was starting to trade my newer approach more. And we can see that was starting to be a little bit more accurate with some of these. You can see here double top flag, and the big thing is that the way I track my trades is I give myself an accuracy score. And I either give myself a 0, 1, or 0.5 at times. And I also grade them A, B, or C, or A plus in some instances, apparently. And this was helping me to get an idea of how accurate I was trading. And it wasn't particularly high. It looks like it probably averaged about 50%. But again, the confirmation trades, we can see 16 trades, 62.5% win percentage, and 94 and 3/4 points, which is just shy of 2,000. So that, that again, very good return. And this was from the 10th of November until the 15th. So only one trading week. A very good return. Fourth journal is now from the from November 16th until I think the end of November, pretty much. And at this point, I had stopped trading any of the original strategy. Was only trading the strategy I'm trading right now. But I had made a slight evolution where I wasn't just trading flag pullbacks. I was also trading some consolidation. And we can see that in this period, 49 trades. Win percentage dropped a little bit. I didn't trade particularly well at times in this. There were some mistakes. And I made a total profit of 53 points, so a little over $1,000. And then my latest journal, which is from the 30th of November up until the current day. 89 trades, 58.4% win percentage, and total profit of 178 and 3/4 points. So just really quickly, I'm going to add up those profit numbers. And we can see that from October 30th, when I started trading this approach, until now, I've made a total of 401.5 points, which is about $8,000. The average loss with this strategy is in the ballpark of about 15 points, I believe. So that is around about 26, 27 times the average loss, or the average loss that I personally have made, including mistakes. And I'm really showing this almost to kind of like remind myself of how well I've actually done the last couple of months, because the last week or so I feel like I performed really poorly. But I've gone from towards the end of October not really thinking I was going to be doing this for very much longer, to getting 3 accounts funded, trading a strategy that does have a large edge, because this as well is including all the mistakes. I do track how the strategy performs if I wasn't to make mistakes, which isn't realistic of what I'm going to achieve, but it is realistic of what is of how big the edge is. And we can see that in just this period from the 30th of October, 51 trades and 82.5% win percentage, total profit of 524 points. In the previous journal, we had a similar win percentage, 30 trades, 80% win percentage, 345 points. And in this journal here, we had 11 trades, 8 wins for 72.7% win percentage. So I may make a video during the for the week between Christmas and New Year to showcase exactly my strategy. If people would like that, I may do it. But this really is just a kind of a recap on my year. It started out a very different way to what it ended. I think that I am positioned as well as I could have hoped for, and probably far better than I could have hoped for going into 2024. Pretty confident that the strategy that I have is one that I can trade fairly accurately. It's a relatively straightforward edge to implement. It's a large edge, which gives me wiggle room. And I've already shown the first 2 months of trading it, which is a very short period. If you think about it, like, how often have you looked back and only been trading for a couple of months and been down and just gone, I'm just making so many mistakes. But trading it for a couple of months and already at a point where I've shown $8,000 of profit split over a couple of evals, a little bit of paper money at the start, and then my live account is, I think, a pretty decent achievement. So going into next year, in the last video I did put my goals forwards. The main goal for me is all about having a growth mindset and trying to not worry about what the P&L is right now. It is the way we keep score, but for me, I want to try to implement ideas that go, hey, I might give up on some P&L today, but if I keep doing, I might give up some P&L, but in a way that is going to improve me for the future. So that's the big goal for 2024. Hopefully we can also hit some of those targets of getting 20 accounts funded and begin seeing some big profit, but it's really one step at a time, and looking too far ahead doesn't really make sense. I'd like to thank everybody for, if you've stuck to the end of this, thank you so much. Just in general, thank everybody for the whole year. It's been pretty cool building a channel, putting out videos. I was really hesitant to do so. I did a couple over the years and never really got into it, and to build a bit of a subscriber base is really cool. The meditation videos, I think, have really, I think one of them has really kicked off, which has been awesome to see, and I hope they help. I hope you have an awesome holiday period, wherever you are in the world, whatever you celebrate, or if there's no celebration but you just get to have the time off because loads of other people are getting time off, then enjoy that. And I hope this year was a good year for you, that you developed and grew as a trader, that you maybe are in a better position now than you were at the start of the year, and that next year you also improve, and that this time next year you'll be in an even better place. So thanks again for watching, and I'll see you all in the next video.